Have you noticed your HOA fees seem to go up almost every year? You're not alone. One of the most common questions homeowners ask is, why does my HOA keep raising dues? Many people assume the board is simply spending more money, but in most cases, the real reasons are much bigger and affect nearly every community in America. To understand why HOA fees increase, we first need to understand what HOA dues actually pay for. HOA fees fund the everyday operations of the community, things like landscaping, irrigation, lighting, insurance, pool maintenance, road repairs, snow removal, security systems, and common area upkeep. Think of the HOA like a small business. It has bills to pay every month, and just like your household budget, those bills have gotten more expensive. The biggest factor driving fee increases is simple: inflation. The cost of labor, materials, fuel, utilities, and contractor services has risen significantly over the last several years. For example, if a landscaping contract cost $20,000 a year 5 years ago, that same service might cost $28,000 or more today. The grass didn't get bigger, but the cost to maintain it certainly did. Another major factor is insurance. Across the country, HOA insurance premiums have increased dramatically due to severe weather events, rising construction costs, and larger claims. Some associations have seen insurance costs double in just a few years. And because insurance is not optional, those increases often flow directly into HOA budgets. Then there's deferred maintenance. This is where things can get expensive. Many communities keep dues artificially low for years because nobody wants fee increases. The problem is that buildings, roads, roofs, and amenities continue aging, whether the budget is ready or not. Eventually, major repairs become unavoidable, and when that happens, owners often face either significant fee increases or special assessments. Special assessments are one-time charges imposed when the HOA doesn't have enough reserves to cover major expenses. Sometimes owners receive bills for thousands of dollars, unexpectedly. That's why healthy reserve funding is so important. A well-managed HOA saves money over time for future repairs, instead of waiting for emergencies to force the issue. Labor shortages have also contributed to rising HOA costs. Finding maintenance workers, landscapers, pool technicians, and contractors has become more difficult in many markets. When service providers charge more, the HOA has little choice but to adjust its budget accordingly. Utility costs can be another hidden factor. Communities often pay for common area electricity, irrigation water, clubhouse utilities, elevators, gate systems, or street lighting. Even a modest increase in utility rates can significantly impact large communities with extensive common areas. Sometimes residents ask, why can't the board just cut expenses instead? And that's a fair question. Responsible boards should always look for efficiencies and competitive vendor pricing. But there's a limit to how much can be cut before service quality suffers. Cutting landscaping too aggressively can hurt property appearance. Delaying maintenance can lead to larger repair bills later. Underfunding reserves can create future financial crises. The reality is that most HOA fee increases are driven by economic conditions and community needs, not because the board wants to charge homeowners more. The best HOAs focus on transparency. They explain where the money is going, provide clear budgets, maintain healthy reserves, and plan for future expenses. So the next time your HOA announces a fee increase, take a look at the budget. Understanding what's behind the numbers can make the increase a lot easier to accept, even if nobody enjoys paying more. If you're a board member, treasurer, or homeowner trying to better understand HOA finances, subscribe for more practical HOA tips, templates, and guides. Because the goal isn't just keeping fees low, it's keeping the community financially healthy for years to come.